Second quarter outlook. Will markets see heightened volatility this quarter? Our great concern looking into the second quarter of 2018 is whether markets will see a significant 1987-like correction. We've been concerned over recent months that the market styles are aligned very much that way, and they're subject to a significant liquidity shock. Liquidity shocks come in three forms. One, central banks. Are central banks likely to tighten significantly? That's clearly been a concern with the reverse QE policy of the Federal Reserve. Secondly, will banking problems in the private sector, as they did in 2008 or prior to that in 1974, cause a major correction? Or thirdly, and this is the factor that we're actually most concerned about, will cross-border flows reverse? Of the three factors, this is the one that is paramount in our view, mainly because so much cash flowed into US safe assets over the prior 3 years. And that money is itching to get out. Essentially what we're beginning to see is money flowing back towards China and Asia on the one hand and the Eurozone on the other. As that money flows out, so US assets will lose value. And it's the speed of that outflow which is really the critical thing to watch. If money starts to leave quickly, as it did in 1987, under concerns about policy and the value of the dollar, then markets are likely to undertake a significant correction. If that money leaves more slowly, then markets may have a slower adjustment, but they may well manage to stabilize later on this year. So it's cross-border flows that is our paramount concern, and that's the issue that we're watching very closely.